Good afternoon, everyone. I'm really pleased and delighted to have an incredible range of experts from across the world here. So I'll get right on to the subject for a discussion today. What we're looking at today in our panel is the physical flows of gold and silver and doré across the world, and trying to get some sense of how these physical flows have changed in recent times and how they've been affected by things like FX controls, quotas, free trade agreements, etc., and also whether there's an impact in gold in terms of the de-dollarization that was talked about in earlier sessions. Let me start right away with, I don't know, I think rather than get into introductions, I'll go straight away and ask questions, and people can then give an idea about their background and talk about it. Let me start with Vikram close by. Vikram, in terms of, you're located in Singapore with ANZ, and in terms of your vantage point, what do you see as the way physical flows of gold and silver have changed during the COVID era? And then post-COVID, what the impact of that change has been?
Thank you, Sunil. And first of all, thank you, DMCC, for inviting me. It's an incredible conference so far. Amazing people. So, yeah, thank you, Sunil. I mean, it's a great question. So I think, what happens is after COVID, right? So, I mean, we have seen across Asia a huge pent-up demand. So it was not only for silver, even for gold. So, I mean, in Asia, we have seen some of the very strictest lockdown. India, China, they are the biggest consumer of precious metals, and in both countries, there was a very strict lockdown. So, for example, moment India started, they started opening up in 2021, we have seen massive spurt of demand. So what happens is, nobody was prepared in Asia for, this kind of demand. Because in COVID times, we have seen that all the metal flows from east to west because there was a dislocation in COMEX. So, everyone was trying to rush metal and put it in the COMEX vaults. And moment all these, emerging economies, especially in Asia, consuming countries, they started opening up, there was massive pent-up demand. Example, in India, all the marriages were installed, right? I mean, people can't get married, and we all know we Indians love big fat weddings, and gold is the, integral part of it. So we have seen premiums going up, scarcity of the supply. At the same time, miners were not ready. It's because of the lockdown, supply chains were broken. So again, we have seen some very decent demand right across Asia, all emerging economies. So yeah, I mean,
great.
Yeah.
So let me ask from the other side of the market. We're so I think privileged to have Tom from CME with us.
Thank you.
And maybe, Tom, you can explain what you saw from that side of the market.
Yeah, and I'd like to echo my thanks to DMCC for having me here on this panel and for having us all here. I think a lot of what Vikram said, it's obviously a mirror, tied in, tied out in terms of what we saw in COMEX in 2020. For reference, I believe we started the decade 2020 with 8 million ounces of good delivery gold in COMEX-approved warehouses. And in the span of 12 months, we saw the total of COMEX gold held in our depositories in New York jump to 40 million ounces. So for reference, that's a 32 million ounce jump in 12 months. So fairly unprecedented in terms of the size and scope of that migration of metal. In the past 2 years, we certainly have seen that tide recede. I don't think the market needs 40 million ounces of gold in New York. I think that's pretty clear. And a lot of it is going towards some of the pent-up demand that you spoke about. I think you're also seeing a normalization in the EFP, which has helped come back more towards fair value, which has helped relieve some concern about holding material in New York for the what if. For what could happen if there is a dislocation again. Given the world today, I don't think anyone can take that, off the table. So right now, I think COMEX is at a fairly balanced level of stock with regards to gold and silver. But at 20 million ounces, just for reference, 20 million ounces is 9 million ounces higher than the previous pre-COVID record of 11 million ounces in 2016, I believe it was. So there's still a historic COMEX gold is turning 50 this year. There's still a historic amount of metal in New York relative to what the historical normal would be.
Interesting. So we've talked about the Far East, we've talked about CME. Maybe closer to home, are you, from your vantage point in Dubai, working with a large refiner here, what have you seen recently in terms of flows? And what did you see during COVID, and what do you see subsequently?
Good afternoon, everyone, and thank you very much for having me on the panel. And I would like to thank DMCC for this wonderful event, which is also a part of the support that the UAE is giving to this industry. Mentioning COVID is a very challenging time, which it has a very special place for us as an experience, because for us, as some precious metals, I think COVID was a stage of a breakthrough. So we all learned from COVID what can happen and how the lockdown have happened. I'm happy to say that possibly some precious metals was the only refinery which shut down for about 12 hours, and then we resumed. We adapted the new systems, and we got the necessary support from the authority and able to reoperate, which gives us an opportunity to develop more the infrastructure to accommodate higher volume, and we invested heavily in machineries and equipments that support us to do more. However, looking at post-COVID, of course, UAE has been always a good destination to do business. The infrastructure that the government has provided in here is exceptional. Talking about the UAE as a location, being a hub, global hub for gold business, we are now having more than 15% of the global flow going through Dubai. With the initiatives that the government are taking in here, such as compliance, supply chain, rules and regulations, government has been also going out to do more agreements, something like CEPA, for example, with India, which makes it very much attractive for the international community, international institution to come also and start looking at that business, because that will enhance even more the volumes to Asian country like India. We're talking about the BRICS, for example. The BRICS relationship also will create some more demand and makes it much more attractive to do business in here. So yeah, volumes were expected to be much more in Dubai. We, in the UAE, we're doing our best to attract the right business, if I would say, the right business to come to Dubai, to be processed in here, and being a hub to be distributed to the rest of the world.
Thank you for that. So clearly, COVID was very positive for the Dubai market. Just switching over to China, and Ronan, from Singapore, I know you watch the Chinese market very carefully. What happened with the Chinese market during COVID, and what's happened subsequently? Maybe you can mention.
Well, China is the largest gold-consuming market in the world, the largest gold miner, and the largest gold importer. So it's a great case study because it ticks all the boxes as regards the largest. And COVID actually hit and stayed in China a lot longer than most other countries. And there were literally rolling lockdowns in various parts of China and Chinese region cities for 3 years during 2020, 21, 22. And they had, as you remember, the zero COVID policy. So in China, even though they're the largest gold mining country and they produce maybe 370 to 390 tons per year, that only represents maybe a quarter of gold demand. So the rest has to be made up with gold imports. So all of this flows through the Shanghai Gold Exchange. So you can look at the Shanghai Gold Exchange withdrawal figures, and there's a good correlation between those and the gold import figures. So what we saw was that there was an absolute collapse in demand for gold in China during COVID, because logically if there are restrictions, people aren't out buying, people aren't working, there's less disposable income. So you could see that in 2018, gold imports into China was a staggering 1,545 tons. It went down slightly to just under 1,000 tons in 2019, but then in 2020, it absolutely collapsed to 217 tons. So you can see that huge dip. There was a recovery in 2021 up to around 788 tons, but it was only by 2022 that the gold import figure was back up towards, say, I think it was 1,300 tons. So it took nearly 2.5 years for that recovery to happen because of the extended nature of the lockdowns within China relative to other countries. And if you're looking at the figures so far this year for the first 3 quarters, the China Gold Association and the Chinese government trade statistics say that China has imported 1,145 tons so far. So when you annualize that, it comes 1,500 tons, which is right up there again, approaching the figure in 2018. So we could say that 2023 is the recovery year for Chinese gold demand, and that's all based on the gold import figures. So their biggest gold import markets are obviously Switzerland, Canada, Australia, Hong Kong, and South Africa. So gold import figures are a very good way of seeing that recovery.
Interesting. So basically, China had a setback during COVID, but it seems to be recovering really, really fast.
Yes, that's right.
And so if we just switch to the second biggest market in the world, which is India, maybe Kamlesh, you can share with us what's been happening in India during COVID and subsequently. Has it recovered the same way as China did?
Yes, once again, thanks a lot to DMCC and really privileged to be a part of this kind of esteemed panel here. I was just hearing, as Vikram and others, Mr. Ayub and Ronan and Thomas. So the focus of course, the first question was about the post-COVID and the transition post-COVID in import numbers. But I was just wondering whether at least in Indian context, that was such an event, apart from the fact that, of course, the supply chain disruptions and the business lockdowns. So it was just a matter of fact that the business won't happen, so the imports also did not happen. But the pent-up demand very soon came up. But after that also so much happened too fast post-COVID also. So I believe that if anything, at least in Indian context, we really believe that as some sort of a student of the gold market, not so much from the regulatory side, so I'm not speaking on behalf of the Reserve Bank or for that matter IFSCA, but I believe that the demand of gold, everything gold in India or from India remains secularly robust. So even though numbers came down for the last financial year, but there were so many other factors. So means it's more of the customs duty side and what happened to the FTAs or maybe some platinum related issues. But I believe that the demand has been consistent. And of course, post-COVID and even post-COVID scenario, the world events have only reinforced perhaps the role of gold for Indian gold economy. It's not just the big fat Indian weddings, but even as gold as a collateral for the huge rural masses. Of course, the middle class is expanding. So if anything, the gold's role as investment product also may go up. How much of it translates or should translate into physical gold imports is another matter. But I believe that that's another story and peculiar Indian dynamics about what is happening with the recycled gold and all. So I would, to answer the question, I believe that it has been fairly consistent demand. The numbers have been there. Yeah. Last year was a bit of a distortion, but I don't think that Indian consumers are buying less gold.
So interesting. So India has that sort of consistent secular trend of gold demand, which has been there for many, many years. Turning to Turkey, I know Arman was saying something similar, so maybe you'd like to share the Turkish experience in the last few years in terms of gold.
First of all, thank you for inviting me as a panelist, and thank you for the organization team for this great conference. You said that COVID was positive in terms of business, but it was very negative for me because Turkey lockdown 2020, March 19, I went to hospital 27 of March under intensive care. But in terms of business, we had a paradise. Yes, it was true. The number that we imported in 2020 is around 520 ton of gold. And since beginning of 2020, there is a permanent demand and there is a permanent premium in the market. Like Dubai, we have never had any lockdown as a company because we have, as an industry, a special permission from the government. We never stopped to work, even for 12 hours, even. And we took other side of the world as a target to us because there were also significant demand in terms of silver for the small products. I think I can give you the number. We export around 15 million ounces to USA. At the same time, we are COMEX good delivery refiner in Turkey. We saw the demand also in terms of gold, and we did even there is a demand in Turkey for the gold, but we also did a lot of shipments to COMEX for our even 995 bars, 49 bars. Most of the metal we divert to USA. So we also see, and the most significant change I see before COVID, after COVID, the number of the Turkish people attending to the conferences. We are almost equal to Indian colleagues. This also shows the changes in our market because in Turkey still the demand is going on. And one of the significant change in the market before COVID, after COVID, we have a gold monetization scheme program also in Turkey. We are collecting gold through the banks from the public. During the COVID, demand is there. People bought the gold. 520 ton we import. After lockdown, during the semi-lockdown period, banks opened their branches. People deposit the gold. Then they sold it in terms of Turkish lira, and they spent their savings online for their needs. This is what I can tell about the Turkish market during the COVID period.
Thank you. Thank you. So if I can summarize from what I understand is, gold during this period has really shown its resilience. People have used it as a store of value investment, and then in some cases people have monetized that to meet their requirements during the time of lockdown. And of course, the most important conclusion is a function of the strongness of gold demand can be seen by conference attendance. The more the conference attendance, the better the market. So I think that's something we can vouch for because we've had a record attendance this year. So
I think it also speaks to gold's mobility, right?
Yeah.
To see that amount of metal in a 1 or 2 year period of time
in and out, yeah.
Move as quickly around the world, quite frankly, is really a testament to the really the globalization. I know we're going to get to maybe the fracturing of that globalization,
right.
but it's a testament to the globalization of that market.
Absolutely, absolutely. And I think that, so let's. Sorry,
yeah, one thing that I forgot to say was that more recently you can see that there's a huge premium on the Shanghai Gold Exchange compared to the LBMA pricing. And some of that is obviously due to there was some supply constraints where some of the local banks that import gold weren't getting reallocated with quotas. But a lot of that was also on the demand side, where the Chinese population is investing more in gold as a safe haven asset, as a store of value, because the property market keeled over, because equities weren't doing so well. The Chinese government were actually worried that with the yuan weakening, they didn't want everybody piling into gold. So they had to release more quotas to sort of bring that premium down. But it's still elevated. It was at a record in October, still very high in September, but it's something to watch over the next short term.
Agreed. And that's why I want to turn my attention to specifically talk about the disruption or change in trade flows due to free trade agreements or similar sort of preferred trading agreements, tariffs, quotas, just to discuss how across the world we've seen changes taking place in terms of the way gold demand is being met because of bilateral agreements or bilateral fractures in agreements in terms of tariffs. So let me start with the big talking point, of course, for the last few months, which is CEPA. And so maybe I'll ask first Kamleshi from the Indian side, and then maybe we'll ask Ayub from the Dubai side to speak about what the experience of CEPA has meant for you, what the reaction to the market has been, and maybe then we can discuss further.
Yes, so from the point of view of the receiving market, I think it's a huge 1% benefit, and the Indian market is actually waiting to lap it up. What defeats logic is that why they were not able to, say, put things in order for the first year. It almost went underutilized or almost unutilized even for this year. So it's more of that India as the buying market putting its house in order. It's mostly about that. So from the Indian side, the story has been that, because it's very obvious that 1% is a huge discount, but then there were so many other things happening around in the market. So there were so many FTAs coming out of closet, so which were maybe undercutting the major FTA. So we are perhaps looking at the dynamics which have played out, and I believe the potential of reaching 140 tons for this year still remains valid, even though the first half year of this current financial year has gone and it is still not what we would have loved it to be. But I believe if things fall in place, the quota will actually be used up. It's only about whether it is IIBX, what is the most efficient way for the TRQ holders to get that, import going and to use their quota. So even yesterday, some notification came. So now the TRQ holders can actually become direct importers through IIBX. We are very hopeful because the discussions have been on around for 6 months now, that even the IGCR norms, the procedural aspects of meeting the end-use conditions, all those also perhaps will be simplified very soon. So we are hopeful from the Indian perspective. I believe this 140 tons should be used up by March.
Okay. Ayub, from the Dubai angle.
Well, from Dubai side, of course, definitely the CEPA agreement was one of the most successful agreements, I would say, globally, because a relationship with one of the largest consuming countries for gold is something, of course.
Closer to the mic.
Closer to the, sorry. So, and this is again, Sunil, when I first started by saying, the government initiatives and to support the local business, as well as the UAE good delivery product. So this is a very smart way to push businesses as well as push a compliant business, because the refinery is qualified to send their gold over to CEPA. To qualify CEPA should be a UAE good delivery. But definitely we're talking about a very important business relationship, very serious volumes that can literally push some volumes to this part of the world, then to Asia. And then from the other side as well, importing the jewelry from India to the UAE is also one of the most important legs. And yet we should start more volumes once the silver CEPA agreement gets streamlined, possibly towards the end of the year.
So maybe you can explain about silver, because it hasn't started yet, but why do you think the potential is so good for silver?
Silver has been consumed largely in India. I think for now, India consumes about 5,000 tons, which is a serious amount of silver. Now with CEPA giving a privilege of approximately 6%.
6%?
Approximately 6%, which will make it very attractive for the entire world to look into this opportunity. But now the challenge is in streamlining the processes in India. So CEPA started in May 1st, 2022. I think at the beginnings it didn't kick off very well because there were certain rules and regulations and paperwork that has to be clarified. Some shipments went there on pilot, but the shipments went there on stock for some time. But later on, towards the end of the year, we start seeing some volumes going. But now, I think 2023 is something, I would say, is a successful relationship. We see great volumes, to be honest.
Thank you. So clearly it seems that from both sides, both UAE and India are very pleased with the arrangement. I just wanted Vikram's perspective as a bullion bank watching the flows across Asia and maybe earlier supplying to India directly. What do they see, or what is his view about how things are going to change as CEPA kicks fully into gear?
Yeah, so from, from a bullion bank perspective, I mean, our observation is, in terms of tariffs and quotas, generally, all emerging economies, they have, this kind of, they put some quotas, they put some restrictions, then there's a tariff, some relaxation here and there. So for example, Southeast Asia. So all Southeast Asian countries except Singapore is an emerging economy. So we have seen fairly tight control over the gold. They put restrictions. Similarly in China, which Ron was talking about, premiums went up. So we need to understand why premium went up. First, it was COVID, yes, supply chain disruptions. But in last, I would say, 1 year, premiums are significantly higher in China because it's a restrictive market. So, I mean, in September, what Ron was saying, yes, it traded as high as $138, which was massive. Then, central bank came out with some quotas, and same day we have seen a massive drop from 138. I think it came back to some $90. So all these things, I think, to make market more transparent, more agile, this quota, sometimes, it depends about the country, about the bilateral relationships as well. For example, CEPA. So as a bullion bank, we see UAE is a shining star. It's a bright spot for even for us, because I mean, although as a bullion bank, we might not able to participate directly, but there's a huge potential when we can be part of the supply chain, we can be part of the liquidity provider. I mean, so you need financial institutions, with big balance sheets to back up this business, because it's a balance sheet business at the end of the day. So yeah, I mean, from our perspective, it works well.
Good, thank you. So you mentioned quotas, and I know Turkey is a shining example of quotas for gold and the impact of quotas for gold. And sitting right in between that kind of market is Arman. So maybe you can explain to people about how quotas work in Turkey, what the impact has been, why there were quotas. Just give some sense to the audience, please.
First of all, don't worry. I'm not going to talk long, but we have around 180 pieces of changes in the last 1 year in terms of banking and financing industry. First of all, for the free trade agreement, we have a free trade agreement with 21 countries. Even we have with Faroe Island, but I don't know why we have. We don't have a CEPA agreement. We are not as much as lucky with the UAE refiners, but thanks to the God, we have enough local demand in Turkey. In last 4 years, we import around 1,500 tons of gold to Turkey, and according to my calculations, consumption per capita in Turkey is bigger than India and China when you look at the numbers. And the FTAs doesn't have too much impact for our business, but we are using the advantages of being a LBMA good delivery refinery. So we are selling our product not with too much advantage, but little bit premium to any part of the world. On the other side, on the FX side, since COVID or after COVID, like every country, we had some difficulties in terms of financial, because of inflation, low demand, low production, lockdowns, and everything. So our government too much focused on the gold imports, because the country needs a lot of foreign currency, especially dollar. So everything, government set a policy. I call it liraization. So they wanted to support Turkish lira. When they look at the gold import numbers, most of the story beginning of this year in January, import number reached to 68 tons of gold in 1 month, which 25% imported by the Istanbul Gold Refinery. So government decided to slow down this business because they would like to keep the foreign currency within the country. First, they put some limits in March 2023. I can give you our own number. They give us a quota for 2 tons, and we just consumed it in a couple of days as a company because there were a huge demand. The demand is just because of the inflation numbers in Turkey, low interest rate, people have saving, so they don't want to convert their money to Turkish lira because it's a low income for them, and everybody would like to buy the gold. Then they, for instance, another restriction they did, related to our business, they stopped the BRICS free zone facility at the airport. And also I am making advertisement for the BRICS. I don't know if they are here. They said that you cannot supply any metal from BRICS free zone to the local market. You can just use it for the other facilities. Then it was not also enough. In July, they bring the full quota system. Every month, our government deciding which company will import how much gold to Turkey, and they declare at the beginning of the month. So we follow this rule at the moment. I don't know how many months, how many years it will continue, but this is the current situation and very good example to FX-related restrictions or quotas.
So I thank you for that. And I think similarly, there's another country, which is Egypt, which has quotas. So maybe you can give some sense of what the impact of FX quotas has been in terms of gold imports into Egypt.
Well, Egypt is pretty much, they have the same culture and mentality as in the Turkish, same with the inflation of deflation of the currency. People start trusting more in gold. So this is where you see most of the demand and the consumption is going now to gold. In Egypt, we are pretty much active. We have a refinery in Egypt, Some Precious Metals Egypt, which is technically now we're producing a very large volume of minted products, because minted products for 110 million people who all in Egypt loves gold. It's a serious volumes to look at. So yeah, demand is very high in Egypt.
Thank you. Ronan, just to say that the quota situation doesn't only remain in countries like Turkey and Egypt, where, for example, FS reserves may be running low, but even a country like China has quotas related to import of gold, and you mentioned that a bit. Maybe you can just elaborate about the impact of these quotas on, for example, FX and the movement of the renminbi against the US dollar, and what kind of relationship is there?
Yeah, when the trade war between the US and China began in early 2018, it was noticeable.
Closer.
Oh, so when the trade war began between the US and China in early 2018, there was a noticeable strengthening of the US dollar rate versus the yuan. So it went down to, it was something like, it was around 7, but it went down to 6.3. It remained like that for about 2 years. And strangely, when COVID hit China in 2020, the yuan actually strengthened again for another 2 years against the US dollar. And then the US dollar from around April 2022 has strengthened again. So now the US dollar is like 7.4 yuan. So you can look at those long-term trends of the strengthening and weakening of the dollar yuan rate, and that has an impact on the gold imports that were coming in, because obviously if the yuan is weakening, it's more expensive in dollar terms to import gold. So, but as regards to quotas, it's something that Sunil you were talking to me about earlier. It's very sort of behind the scenes. The people involved in the various banks know what their quotas are, but in public it's very difficult to know what those quotas are. And they get renewed sometimes, and other times they don't, or there's a delay on renewal. So, but that's you'll see Reuters and Bloomberg saying they talk to people who didn't want to identify themselves, saying that the quotas have been renewed, that sort of thing. So that's something you should keep a lookout for in the Chinese market, because the PBOC is literally the only entity that is allowed import, but they give permission to these banks, local and foreign, to import on their behalf, but only up to the use of those quota levels.
Right. Thank you. So let's sort of switch topic in terms of, clearly you can see the trend that quotas are being enforced really because there's a core demand for physical gold, especially in countries where, let's say, FX weakness is seen. People gravitate towards gold and gold investment. So I'll just switch to the subject of gold investment, and maybe I'll ask Tom if you can maybe speculate about one thing. You mentioned that the core holdings on COBEX have moved from pre-COVID around 8 million ounces to about 20 million ounces. So do you think that extra sort of 10 million ounces is like a core investment, or just a speculation? What do you think? What do you think it's about?
I think one could see it as that, but I think it's more a safety net, whereby I think everyone learned in 2020 that there are differences to what is good delivery in COMEX and what is good in London, and that the ability to morph that material into what you need is a time-consuming and at times very expensive process. And so I do think there's an element of, well, if you're allowed to, let's say, play in that sandbox, so to speak, from a risk management perspective, we want you to hold that material in New York. We don't want it in 400-ounce bar in London on the other side. So I think there's an element of that, even though it may not be needed, and perhaps it could go to greener pastures to earn a higher return. There's an element of safety to that.
I agree. So I said that's very good. So basically what you're saying is people who are shorting futures, for example, are holding more physical to back it up in case they need to deliver in the future.
Yeah, and there's also an element of we hold, or we now offer warrants for gold as collateral against futures margining across our product suite, not just against gold. Right. So you can hold gold warrants and use that as margin collateral for interest rate, equities, crypto, the whole suite. And so in a 5% yield environment, when margin isn't an afterthought anymore, I think that's very vital, especially if your business requires you to hold warrants, or there is a good reason to hold warrants. It's essentially turning a dead asset into something very valuable.
Absolutely. Okay, good. Thank you very much. Just want to mention to the audience that we are accepting questions. I think if you use your app, we're happy to answer any questions. I will turn to Kamlesh because we've received an interesting question related to the subject. I think that was Erman mentioned about gold monetization in Turkey has been very successful, and I think maybe a lot of people in the market already know that Indian retail holdings are in excess of 20,000, maybe 30,000 tons, and the government has been looking at monetizing that gold. So the question that came in was, why has gold monetization in India not been successful? Would you like to maybe comment on that?
Yes, but then that's a very broad question, but then, and it is also a part of why the regulatory policy framework in general also needs to be spruced up. But to focus specifically on the gold monetization scheme, that has not taken off, even though it was modified with some tinkering on the edges. The reasons actually need to be studied in maybe a greater detail, and perhaps the policy system or the policy machinery perhaps, means again I'm making a statement not on behalf of the Reserve Bank or the Government of India, but I do believe again as someone who studies the policy aspect as well, that we have to wake up and smell the coffee, because there is some degree of denial to the subject. So we have not been able to actually take the issue by horns. So it is maybe the institutional participation, perhaps. So unless the banking system becomes the foundation around which the whole scheme works, That is what is being expected by the consumers. In the initial, I think there were some survey results, which were WGC survey results were shared. And the first issue was about the lack of trust. So I think it cannot be more pronounced in any market. I don't know much about the other markets, but in India, definitely as a consumer or as someone who is a lay observer, one can easily say that it has not inspired much confidence and trust. So that is just to answer in one form, because you can devise or you can make some modifications to the policy, but I believe that it has to be addressed right from scratch again. So what is the issue? What led to the failures? Why people are not coming forward? I believe that it is starting with a lack of trust. Now, lack of trust in what? Whether it is the gold purity norms, I think BIS norms and the technical standards are as good as anywhere in the world. Maybe the awareness about the responsible sourcing part, that may not be too much of an issue at the retail level, but it's more about the taxation aspects, more about what I should say, the confidence in the system that we will be able to get the gold when we need. So I believe the whole policy is to be run from a centralized gold policy board or something. And that may come maybe, if not directly within the central bank itself, maybe something blessed, some sort of an SRO or something. That is what I believe will lead to a greater success. Otherwise, it is just that kind of policy where it is there, but then not really working on the ground. The kind of results we have seen in other markets are not coming up.
Thank you. I'll switch to Ronan. Ronan, you're uniquely placed to talk about the next question, which is BRICS. Being based in Brazil now, and earlier you were close to China in terms of being based in Singapore, and you've seen both the continents really well. One of the big talking points amongst the BRICS Plus group is what they call de-dollarization. Some people call it, more focus on gold reserves. I wanted to get a sense from you about what role do you think gold plays in this whole talk about de-dollarization amongst the BRICS? Do you think there's seriousness behind it? Do you think there's actual action that will happen? Just give us your view, please.
Yeah, well, now that BRICS is expanding to BRICS Plus with 6 new entrants, there's going to be 11 major countries, as Jim Rickards was saying earlier. And I think it's very interesting that in 2024, Russia has the chairship of the BRICS presidency, if you want to call it that. And there's actually a guy who's a very influential economist, and he's an advisor of Putin, and he's a former Duma representative called Sergei Glayev. And he's actually the Minister for Macroeconomic Integration of the Eurasian Economic Commission, which administers the Eurasian Economic Union, which is a grouping of Armenia, Kazakhstan, Belarus, Kyrgyzstan, and the Russian Federation. And I think he's going to have a very influential role during 2024 as an advisor to the BRICS Plus group about how they can, as Jim Rickards said, get a gold-backed currency or a commodity-backed currency. Sergei Glayev's initial pet theory was that he wanted to propose a commodity-backed currency for initially the Eurasian Economic Alliance. But as Jim Rickards alluded to, there's a lot of overlaps now between BRICS Plus, OPEC Plus, SCO, and the Eurasian Economic Alliance. And I think that they're going to try and launch some sort of initiative to introduce, or at least get the BRICS leaders thinking about a gold-backed or a basket of commodity-backed settlement unit that they can use in their international trade between each other.
Excellent. What do you think what do you think the impact of that will be on the gold market? Any view?
Well, if it's announced that they will have a gold-backed settlement unit, that could have a huge overnight revaluation of the gold price, and it could actually torpedo the paper markets, because if they're fractionally backed in London and maybe New York, I think Tom won't agree with me on that. But it could be some overnight process. But maybe what they will do instead is just put out the idea and see what the reaction is.
Thank you. Thank you for that. I think maybe Arman, you want to
add something?
Sure.
You said that why gold monetization she was not successful in India. I can tell you the reason. Our Indian colleagues, Indian friends, and World Gold Council in India, they talked to everyone, but they didn't talk to Istanbul Gold Refinery. They didn't ask us anything else about it because it took 5 years to convince our central bank, government, private banks to start the system. We started to do it since 2010, very successfully. Maybe because calculated amount under mattress is around 5,000 tons in Turkey. And the value added amount we put in last 15 years is around $15 billion to Turkish economy. When we start this system, the gold reserve at central bank is 116 tons. Now it reached to 702, according to the balance sheet, 10 November 2023.
That's incredible. And what is the gold holding, the retail gold monetization holdings right now?
I didn't check the detail, but I have some numbers. Even yesterday I spoke to one of my colleagues from World Gold Council.
But it's in excess of 200 to 300 tons, is it? Something like that?
703 tons, 3 tons of them are non-standard, 50 ton treasury, 8 ton is private banks in Turkey, 110 ton at the moment.
110 tons?
Yeah, reserve ratio.
Okay.
The banks are keeping at the central bank.
Incredible. It's very successful.
Yeah, if you convert these numbers to Indian under mattress number, which is maybe 25,000 ton, if they talk to us, we can guide them what to do. That's why we set up a refinery in Ahmedabad, and it started the facility in last August, and we're really planning to do this business in India like we did it in Turkey.
Thank you. Thanks for that. I'm sure somebody's listening and they'll contact you. Thank you very much. So thanks for the panelists. It's fantastic. I hope everyone in the audience got a good sense of the breadth of knowledge that our panelists have contributed. And thank you for listening, and have a good conference. Thank you.